Welcome everyone, and thank you very much for joining us to today's webinar. My name is Veronica Studsgaard, and I'm the founder and CEO of IAMTN. Today we are presenting a panel of experts to discuss the findings of IAMTN's latest report on the impact of COVID-19 on migrants and remittances. The findings of the report are based on a study and survey conducted by IAMTN in collaboration with UNCDF. On behalf of IAMTN, I would like to say thank you to everyone who responded to the survey, and a special thank you to UNCDF for supporting IAMTN in this initiative. Just a little housekeeping before we start. If you have any questions during the webinar, please type them into the box, the question box in your control panel. We will bring them up during the presentation. And with this, I would like to pass control to Mohit Davar. Mohit Davar is our chairman, and he will introduce the panel that we have today. Thank you.
Great. Thanks, Veronica. And welcome everybody to this IAMTN webinar to discuss the impact of COVID on remittances and migrants. We have a great panel, and I'll introduce them in a minute. Not that they need any introduction, but just before I do that, what I want to do is a quick poll, just to sort of get a sense of where everybody is calling from and what organization you represent. So I'm just going to launch the first poll, should be on your screen. If you could just choose one of those in each of those questions. Great, we have well over 100 people, so we should just give them a couple of seconds. Okay, I think that should do it. So if I end this poll, hopefully the results will be on your screen. Can you all see that? So clearly Europe, 37%, the contingent from Africa, and almost 50% remittance service providers, and then 40% in the other categories. So great, that's perfect. And with that, let's get into it. So on the panel today, it gives me a great pleasure, not that these gentlemen need any introduction, but we have Dilip from World Bank, who is just dialing in as we speak. He's having some challenges with his laptop, so we'll give him a couple of minutes to get in, but we will start nonetheless. We have Mr. Osama, who is the CEO of Fardan Exchange and president of FERG, calling in from Dubai. We have also Davar, who's the founder and CEO of MFS in South Africa. Nick Day, who's the CEO and founder of Small World. And last but by no means least, Michael Kent, who is the chairman and founder of Azimo. So great. Well, welcome, gents, and thanks very much for agreeing to take part in this webinar. As we've discussed earlier, each panelist will have a maximum of 5 minutes to sort of share their thoughts on how COVID is impacting, migrant and remittances. And in particular, I would request, anything that you can share in terms of your experience on the ground that you see in your markets would be of particular interest. I had oh, that was probably Dilip. Veronica, I'll leave you to sort that out. I had sort of originally penciled in Dilip to launch this, but let's actually, if Osama, you wouldn't mind kicking us off, I'll hand over to you, please.
Sure. Thank you very much. First of all, thank you, Veronica and Mohit and the IAMTN for conducting this important, I believe, and kind of, I believe, follow-up, because there are other forums as we're following up on remittances and the impact of COVID. Being in the remittance industry, we've been facing kind of a big challenge with the unprecedented phenomena, which is the COVID-19, impacting the whole businesses. It's not only the remittances, I believe it's also having a negative impact on all other activities, commercial activities and economic activities. Plus, on the top of it is the healthcare and the unprecedented way of addressing such, big pandemic issues, and which is also having a heavy pressure on the health organizations and the relative government organizations. To be more specific, when it comes to the remittance industry within this region and specifically in United Arab Emirates, I believe we are also unique in this region. We being one of the most exporting remittance countries, we are coming in UAE as a second after USA, and the labor force are contributing to almost 85% of the expats in general, to 85% of the population UAE. So we have a very unique situation where the impact is hitting the many businesses which are labor, high density labor things, and they are not able to continue the normal business. And that is part of the risks which we've been facing, is the ability to have the immigrants themselves being able to get their salaries and then do the remittances. But speaking in general, there was kind of, I believe, a fast response from the government upon our request that we should not be part of the lockdown. When the lockdown took place, as a first measure from the government, shutting most of the businesses and shopping malls and other activities, and going into kind of managed curfew, we've been exempted. The top officials were in touch with our industry in order to give us under the what we call it the exempted activities, which is like pharmacies and food supply and food chains and groceries and medical services. So we've been able to be part of those activities, which allowed us to a certain level to be active and operational and to mitigate the risks of stopping the zero cash flow, which will be happening to other businesses. I believe such engagement from the government to made it more down here in UAE specifically, to also ensure the immigrants that they have a channel to remit back to their families, and they have a channel to make them more little bit stabilized with such tough conditions everybody is living in, especially the labor camps. We all understand they live also in their their housing things is high density place where their exposure of the getting infected by the COVID-19 is much higher. And that is, the government allowed us certain level. For example, Abu Dhabi government asked us recently to go and serve the people within the camps. So we also have our people wearing similar to what the medical personnel is wearing, and they go and serve those people in the camps. We feel this is also part of our contribution to make sure that we having such satisfaction to this segment of the labors, and make sure that there is now. This is one side from the sending. On the receiving part, yes, it's being impacted because, like in Philippines, many of those outlets for dispersing the remittances were locked down. So it depends on the flow of such remittances. We're depending a lot on the receiving part as well. But in general, we have seen not that huge decline. We've been seeing kind of a moderate, I call it, decline in the remittances in UAE. I consider it mainly between 10 to 20% decline, depends on different corridors. And that is mainly not because of the people not willing to remit, but because they were not having access to the remittance outlets due to the curfew, or to the due at one level in Dubai. We've been 2 weeks operating only up to 2 p.m. from 8 a.m. up to 2 p.m. So that was very limited time. Now it's just been reopened, and they've been allowed us for a more extended timings. So I will not consider that as something which is related mainly to the salaries or to the, yes, many people being laid off, and we have heard about more than 200,000 is being now repatriated back to India, for example, especially from Kerala. But in general, not majority of them are the part of the workforce. I think I may stop here, Mohit, if you don't mind, and so I don't take more time.
No, thank you very much for that. That was great. If I can go on to Nick, please, to share his thoughts.
Sure. So good afternoon, everyone. I'm Nick Day, CEO of Small World, and Mohit's asked me just to talk a little bit about Small World's experience of the lockdown. And I guess, to start with an obvious point, the impact on Small World has been a function of our send country mix and the timing of lockdowns in different send countries, and also our receive country mix, right? And the impact of the lockdown and the severity of the lockdown in the corridors that that make up a significant part of our business. I guess, so just to explain, we operate across Europe. Our business is split between Northern Europe and Southern Europe in terms of how we're organized. We have a North American operation, we have an African operation, mainly in the West, and we have a South American operation. And, I think if I just share some kind of thoughts around kind of how that's played out. I guess our experience started largely in Southern Europe, right? No surprise, with Italy going into quite a strong lockdown, followed by Spain, and then rapidly moving through continental Europe, Belgium, France, pretty much all of Europe, the UK, and the US then coming, I guess, last in timing in terms of going into those lockdowns. And the impact on customers on remittance flows that we've seen have been deepest in that immediate period just after customers went into lockdown. Right? There was almost a shock effect of customers and agents and the entire economy being told effectively to go home and cease activity. What has been very interesting is the kind of consistency in the pace of recovery from a low point, which was effectively the end of March, which was contrary certainly to my expectations going into this, that April would be, we'd kind of go into it in March and April would be a continued decline. Actually, since the end of March, we've seen quite strong recovery, and that recovery has been quite consistent across different territories. So North America and Europe, quite different in terms of the timing that they went in, but the pace of recovery has been pretty consistent. We're Small World's an omni-channel business, right? So we operate an agent network, we operate a network of our own stores, we operate remote services by phone, we operate digital services, web and app. So perhaps to share some thoughts on our experience there. I mean, clearly, a big surge in digital activity, but also a big surge in phone-based activity. One of the things we were doing was reaching out to our customers and to our agents to make sure that they were aware that we were still operating, that we are classified as an essential activity, and I'll touch more on that in a moment. And supporting our agents, many of whom did not have the access to regulators or the access to government statements about who was permitted to do what, right? And supporting them in continuing where they were able to, and where they weren't impacted by illness or required kind of isolation. Clearly, some countries such as France have very strict lockdowns. I mean, you're not permitted to leave your house without the right piece of paper and permit, and others much more relaxed. So we've seen that impact activity as well. In terms of customers, clearly restricted quite significantly during the lockdown period. We've seen the average principal sent increase quite markedly. So there's a degree, I think, to which customers are they're out and about doing what they need to do less frequently and sending larger amounts when they do. So I think that's kind of logical. And I think across all of these kind of timing of lockdown and severity of lockdown points in different geographies, there's also the overlay of the kind of macro currency effect. So in early March, steep falls in the price of oil, significant depreciation in a number of emerging market currencies, right, where their economies are closely linked to oil, and that has had a positive effect, right, on ATV and on flows. They're quite, really supporting some of those flows. Conscious of time, Mohit, just two final thoughts, and I'm sure we'll pick up on these more. Firstly, I think we've been very fortunate that really all of Europe, I think, has not very transparently and very immediately, but has supported the sector in classifying it as an essential activity. It has taken a little bit of time to try and get confirmation of that from regulators, from government statements to kind of support continuation of activity, but largely remittance services, open for business. What has been disappointing is that many regulators in many countries have continued with inspections and audits and oversight and things that are really quite onerous on companies at a time when companies have been dealing with a pretty significant crisis, with a significant number of employees unable to work through sickness, isolation, or other restrictions. And that's one of the places where I think the association can play a role to try and drive some common sense in certain, and it's not every regulator, it's not in every country, but without naming names, I could give you a couple who have effectively continued as if it was business as usual, which seems a little bit unreasonable.
Right, great. Thank you, Nick. Dilip has actually joined us, so welcome, Dilip. So, Dara, if we could move on to you, please, to share your thoughts.
Okay. So I was saying, I'm calling from South Africa, and as many of you know, MFS Africa, we are a different type of player in this setting. We are a service provider to remittance company like Nick's and like Mike, Azimo, and so on. We facilitate mostly digital payments, either from or to mobile phone. We cover about 33 markets in Sub-Saharan Africa, and we work with all the major digital players in Sub-Saharan Africa. But we serve a pretty large number of MTOs around the world, from the US, Canada, all the way through Europe, down to Australia, going through the Gulf. And we have seen also an interesting set of events, I would say, since, call it mid-March, all the way to now. It's important to keep in mind that in terms of transaction numbers, about 65% of our transaction actually originate in Africa and terminate in Africa. And the balance originates somewhere in the world and terminates in Africa. First thing is that the catastrophe, the health catastrophe that we were worrying about in Africa has not happened. And we're happy with that. I mean, if you believe the very early trajectory predictions, the most optimistic were putting the number of deaths around 300,000. As of last week, we still have around 50,000 cases across the whole of Africa. That's about 11, 12 weeks after the first case. We still have less than 5,000 deaths, actually less than 2,000 across the whole continent. So we are definitely not on the initial catastrophe curves that we were all fearing. And early action by governments certainly help in that direction. But there's certainly a time lag in what we're seeing in terms of the health crisis. And even if we manage to avoid the health crisis, we're already entering some sort of economical crisis. South Africa, where I'm calling you from, has been on lockdown for 8 weeks now. And we are really testing the limit of what the economy can take before it breaks. So that means a lot of people, jobs, just as you're mentioning, but also that means a lot of the confusion that Nick was talking about around essential service, that has definitely played out across the continent. What I must say is that on aggregate, our business has been growing a lot. I would say some of the corridors in the last 6 weeks, we double or triple the daily rates that through some of the corridors. So aggregate, it has been great acceleration look at it. So
Dare, we're
right
losing you.
after the beginning of the lockdown in South Africa, I will take the video out to make it easier.
Great, thank you.
Can you hear me? Yeah. So it is a bit of a mixed bag. We saw a sharp decline from South Africa right after the lockdown, just as Ning was explaining, which is one of our biggest sender in Africa. And we haven't really recovered from that yet. I think we are yet to, April was deeper. So unlike what Nick saw, we actually saw the continuation of that dip into April. May is looking a little bit better, but we are not yet back to the pre-COVID. I would say in Africa is the only country that we saw a sharp decline. Everywhere else, it has remained more or less business as usual. I'm talking about transaction originating from Africa, and I think that has to do a lot with the early step that some of the central banks took, like in Kenya, in Francophone West Africa, to increase the size of what you can do with mobile money. So it's now, some of the limits have been raised very, very high, that you could use it pretty much as a replacement to bank account. It has to do with the fact that regulators have also, or policymakers have been actively promoting digital transactions. So that has kept things more or less flowing when it comes to movement in Africa. Movement from the rest of the world into Africa probably mirror what Nick was saying. We saw some, starting in Europe all the way to US, some decline in some of our partners, most of them being the one operating cash network. We haven't really seen any decline on the digital initiation side. If anything, some of them have seen a growth. Some of our partners are averaging now almost 200, 300% in terms of the growth that they've seen over that period. When it comes to cash itself, we still have some, because at the end of the day, the mobile money transactions still have to end up on some cash, the cash in, cash out agents, the mobile money agent. And that seems to be resisting quite well. So we haven't heard a lot of complaint or any problem with the cash in, cash out mobile networks of our partners. So just to sum it up, I would say we are not sure. It's pretty clear that we haven't seen the worst of, like the places like Europe. But from what we see, there is reason for hope that the health crisis may not be as severe as anticipated. We are seeing an acceleration on the digital side and not a massive decline really on the cash side for now.
Okay, great. Thank you, Dare. Mike, if I can come to you, please, to share your thoughts.
Sure. Yeah, thank you. Thanks to everyone on the panel. Thanks to everyone who's listening. It's good to come together in these tough times. So yeah, Michael Kent, founder, chairman of Azimo. We are effectively we're a digital company that's applied itself to money remittances. So founded Small World with Nick, and then in 2012 founded Azimo, really as a digital only way of customers sending money, an alternative to the traditional model of Western Union and MoneyGram. So yeah, I guess I know everyone's keen to get onto the question, so I'll keep it reasonably short. We send from Europe, so all of the big 27 countries in Europe. Big markets for us are Germany, France, Spain, Italy, and the UK. I'll talk a little bit about, I think, what we've specifically seen in terms of our customer set, because I think that should be interesting to people. And then just a couple of reflections on the market, because I actually think that's pretty interesting too. So we had a tough couple of weeks at the beginning, in the middle of March, actually, when lockdown started to happen. And we put most of that down to a very strong decline. Nick mentioned some emerging market currencies. I'm not sure if you can class the pound as an emerging market currency, but it certainly behaved like one for most of March. So a very strong decline, strongest decline in the pound since sort of 1985. And that had a big knock-on effect. The euro was very weak, and I think a lot of our customers actually just stopped sending. They saw these terrible rates driven by the strength of the dollar, and so we saw quite a big decline in March. Subsequent to that, we've actually seen a huge surge in new customers. So our new customer activation rate, which is people coming onto the platform and sending money, is 100% up year on year. So it's way ahead of where we would expect it to be. And most of those customers, we've actually decreased our marketing budget. So most of those customers are actually coming through referrals. So the biggest driver of this growth, something like 40% of customers are now coming in through referral channels where they're able to invite other users on WhatsApp or Facebook or other messaging platforms. And then, and actually Facebook and WhatsApp are reporting big surges in messaging across the board. And then actually word of mouth seems to be another, which isn't tracked as referral on our system, which seems to be another one driving that change. We've seen a decline in average transaction value. So it's kind of the converse to Nick's trend. We've seen people send about 10% less per transaction. And we've seen people send a little bit more frequently. And we put that down to the fact that people are potentially have less money to send. And I think that the sort of big elephant in the room is just the economic impact of, what's going on and how that will play out in the next few quarters. But we certainly think that people have less money to send, and that trend is likely to continue. We think the frequency is probably related to lockdown, where they're sending to a couple of family members who can't necessarily get together on the receive side. So yeah, we've seen a little bit of a move towards on termination to account versus cash payout. It's not huge. It's a couple of percentage points, a few percentage points, but actually that's a much bigger shift than we would normally expect. So people are starting to send to either mobile wallets that serviced by people like Davar, or they're sending to accounts because the cash payout networks are just not operating properly at the moment. The Philippines is a good example of just how interrupted some of those networks have been. Stores are shut, and if they're open for a reduced number of hours. They have money logistics, getting money into those stores and agents can be hard. So, and then I think that the other thing to note from us is customer service and financial ops, but particularly our customer service team have dealt with a very big spike in inbound customer calls. So basically people are uncertain as to what's going on. A lot of people are phoning up as users for the first time to make sure they've done it properly, work out how it works. So actually we've seen a very large surge in sort of inbound customer inquiries, and that at a time when of course everyone is trying, like we've been a good example on this phone call, just how hard it is sometimes to work remotely. So I think probably that we're all reasonably adept now at video conferencing. We probably all went in 8 weeks ago, but that I think is testament just to sort of the resilience of the industry and the people in it to sort of get stuff up and running. And then just a couple of points on the market. I think it's very interesting that Finabler has effectively gone bust. Not COVID related, but that was probably the second largest money transfer company globally, second or third. So that's a big structural change that has happened in our industry lately. And then of course you have other players, both MoneyGram and Western Union and RIA reported in the last 10 days or so. They've all reported a surge in digital and a decline, a very strong decline. In the case of MoneyGram, it was up to 30% decline in their offline volumes. So I think you can see some stuff coming out there. MoneyGram is going to have a tough time given its sort of debt load and share price at the moment. So I think there's a lot of, at a sort of macro level, we don't want to see anyone get into trouble, but I think there's going to be some ructions. Nick and I ran remittance company together in the last financial crisis, and in particularly that was a big business in Spain. And what we saw there were a couple of sort of quite high profile exits from the market. And after that, actually, things settled down. So, I think it's going to be interesting to see how the rest of the year plays out.
Thanks, Michael. Yeah, I think the whole Finabler story probably deserves a webinar on its own, but we'll leave that for now. I'm hoping, I can see Dilip smiling again, so I'm hoping that Dilip were able to, oh, he's shaking his head. Are you, as I always say to everybody, you're the man sitting in World Bank who has his pulse on all the 275 million migrants. So would be great to hear from you, Dilip. Over to you.
Issues. So I would like to make a few points. you have all seen the headline message that remittance flows in 2020 could decline by as much as 20%. Yeah, sometimes in the market they say it is a bloodbath. It is going to be terrible. So why is it that I might sound so pessimistic? You know, the first thing I did when I was trying to think about the situation was to look at how this crisis compares with other crises. And the most closest one that we know is the global financial crisis of 2008-2009, when we saw a 5% dip in remittance flows to low and middle income countries and a quick bounce back. Actually, 2009, there was a 5% dip in remittance flows. 2010, remittances were back up to pre-crisis level, in fact, higher than that. And then they resumed the growth. And it is true also that in Latin America, Mexico, El Salvador, Guatemala, there was a continuous decline for a few years after that. But most places it bounced back. Would we see that now? And the answer is that the global financial crisis actually affected a few countries. It is called global because we have a very strange worldview. If it is US, it is global. If it is UK, it is global. If it is Europe, it is global. Actually, it wasn't global. Not like the current one. Then you look at the other big one, like Ebola crisis, where only Guinea, Liberia, Sierra Leone, and now Congo, there are a few countries affected. And yes, there were serious effects there, but those were countries that receive remittances. They're not sources of remittances. So remittances probably went up. Anecdotally, we heard that, but we did not have any data, nothing to show. This crisis is different because it is truly affecting everyone. So the closest that I can think of, think of a close comparator is the Spanish flu, when 25% of the world's population were impacted. And the largest number of deaths was in China, then in India. And then you might know that Spanish flu had nothing to do with Spain. It started in the US most likely. And just because the Spanish press was open to talk about it, not curfewed or blocked, that's why it was called Spanish flu. And the taint still stays. But during the Spanish flu, 25% of the world's population was impacted, and it was the impact everywhere, global, but not like this current one. Okay, what happened during Spanish flu? And I have only one chart that I could recreate from the from records from the UK, and UK was the center of the world at that time. So that is probably symptomatic of probably symptomatic of what was happening in the world. And that chart is shocking. It is shocking because it shows, it goes like this: the first quarter of spring of 1918. Remember, that was a war period. So it goes like this. Then it goes like that in August, September, October. So in July, the virus mutated, and second, meaning the second phase, starting September, October, November of 1918 was the peak. And then it kind of, people went for Christmas, things calmed down a bit. Again in January, February, March of 1919, there was another peak. Okay, that thing did not go away until 2020. I explained this in all the details to give us a sense of what might happen this time. And today, as Elon Musk is opening his facilities already, I can already see the beginning of a second phase to this problem. Okay, while some places in New York, for example, they're thinking about, okay, maybe we have gone to a dip. Others are already beginning to push for the second start of a cycle to start, the second phase. My worry is that the world will not be the same for a long time to come, and the crisis will continue for a while. With that, what is happening to migration? That must precede remittances, and what is happening to remittances? First, migrants are staying where they are. because they just can't get anywhere. Even if they lose jobs, they can't travel back because there are no facilities available for transport. So people are locked in, they are losing jobs. Migrants are more vulnerable to unemployment during a crisis than native born people, and migrants are locked in. So they're not able to send money home. And here, there is the issue of internal migration and international migration. Some internal migrants are walking back home. Some intra-regional migrants like Venezuelans in Colombia, Peru are walking back home. And yet it is really that most people are stranded. So the main effect on remittances will come from the loss of employment and loss of incomes. So with that, what we are looking at now is remittance flows to fall by 20% on average to low and middle income countries from the record high of 554 billion last year. 2019 data actually came out larger than our original estimate. So 2019, the remittance flows reached 554 billion. And in 2020, we are expecting it to dip by 108 billion or so, 107 billion, 109 billion to 445 billion, 445 billion. Again, this is recorded remittance flows. Now, with the lockdown affecting remittance services, cash to cash still being the predominant way of sending money, meaning people going to a store and sending money, families back home going to a store and picking up money, because that stores have been impacted because of the lockdown. People would have normally gone to informal channels to send money, but they're not able to do that because nobody is going home. And I don't know how Hawala dealers are operating. That would be something to find out. But I think truly remittances are not finding a way out other than online way of sending money, where Europe has done better. The problem with online sending money is that many migrants, especially poorer, lower skilled, irregular, undocumented migrants, don't have bank accounts or credit cards. So they are also cut off from the online channels. Also on the other side, on the recipient side, the families don't have bank accounts. So with that, remittance services have been disrupted. And we are expecting that remittance flows would fall the least in East Asia and Pacific, and largely that is actually a bit artificial in a way because of China factor. But in the Philippines, there would be a fall of 17-18% in remittance flows. And then Europe and Central Asia would be impacted the most. In Europe and Central Asia, remittance flows could fall by as much as 27%, because on top of the economic crisis and loss of economic activities, weakening economic activities, we have oil prices falling, which will affect GCC countries as well as Russia. And in the case of Russia, as well as Europe and non-US dollar denominated source countries, the currencies like ruble has depreciated, euro is weaker against the US dollar. So that would translate into further decline in remittance flows. So three factors that would affect the drop in remittance flows: economic activity and income losses for migrants, the oil price impact that would be additional in GCC and Russia corridor, and then exchange rate effects will impact particularly Russia, but also money coming from different non-US dollar denominated sources. And finally, a point about Mexican remittances in March, which shot through the roof in a year of increase of 34-35%. That seems to be directly related to the depreciation of the peso by something like 20 to 25% against the US dollar. In the beginning of March, the peso was under 20, about 19. End of March, it had gone up to 24, 25. So that seems to be an aberration. And anyways, March, April, May, and particularly May, you see a peaking of remittances to seasonally to Mexico because of the Mother's Day. So we will see March, April, May, large increases in remittance flows to Mexico and probably Latin America, but that's an aberration. Overall, I still think that there'll be a 20% fall. So what can be done in terms of policies? Well, recognize remittances as as essential would help it keep the stores open. Then some sort of facilitation of access to online channels, whether it is some sort of relaxation, temporary relaxation, perhaps for small remittances, in terms of AML CFT regulations, KYC requirements, and perhaps even some incentives could be offered to money service businesses to bring in more money. So that's where I would. And over to you.
No, thank you for the Dilip. I was going to actually ask you to, but you gave us a good overview of how you got onto that 20%. I mean, it seems to me like hearing the panelists and also talking to a lot of other people, so sort of volume impact has not been almost as grave as I thought it would have been. And I want to say optimistic, but, sort of wonder at the same time as you read stories about, migrants being repatriated out of Gulf and, losing jobs, big infrastructure projects being canceled, Expo being postponed, whether that's just shifted and we're sort of, the worst is still to come. I hope not. But I think at this point, what would be good is maybe if I can launch another poll where you'll see this on your screen coming up soon. What is the decline in flows that has been experienced by the providers? If people could sort of take one of those, and it'd be good to get a pulse on what are you seeing. Obviously, some would have seen an increase, which is great. Interesting. Just give it a few more seconds. So we have about 160 plus people on here. So just let them choose one. And you don't have to be exact, so you can just you can pick one relatively quickly. Okay, that's more than 50% answered. So I'm going to end it just to get a snapshot and share the results with you all. Hopefully you can see it. Under 20%, 27%, wow, 20 to 40%, 37% have been impacted and 25% saw an increase. So that's interesting. Okay, I think that's a good segue to my sort of first question, and there's a lot of questions coming in from the participants, and I'll sort of summarize. A lot of them are to do with sort of cash and digital. So it seems to me like, reading stuff, talking to people, and we've heard the panelists also say that digital is going up, but it seems like everybody seems to think the magical pill for the remittance industry is just to digitize. And, it wasn't like, while this has been a tipping point, the customers weren't waiting for COVID to happen. There's a lot more to it than sort of accessing digital services, because they do exist. And while, as Mike mentioned, I think MoneyGram and Western Union have seen increases, it still accounts for 16, 18% of their overall volume in Q1. So, you still have 80+% that is still sort of walk in. Mike, maybe you can sort of kick us off. I mean, as someone who's lived his life, for the last 5+ years on this, if, a lot of people here will be looking at saying, okay, I need to accelerate my digital proposition, or I need to launch one because I'm losing the traditional walk-in business. I mean, what are some of the lessons that, you've learned that you could share with them? Because I'm sure it's not about just stick an app or a website out and the transactions will come.
Sure. I mean, we've been pushing very hard for consumers to use digital for a long time. I think nobody really foresaw just how ubiquitous smartphones would be when we started the company all those years ago. But it offers a more convenient, faster, and cheaper service by and large than going to a branch or a high street. It ain't easy, is the thing I would say, having been involved in traditional and digital remittances quite deeply for the last sort of 15 years. You have to stop thinking like I guess an operational business, which is really sort of managing cash logistics and money logistics, which is and you have to start thinking more about like a technology company, and the way that you organize yourself, the way that you put your engineering and product teams front and center, the way you sort of structure the company, the way you raise money into the company, the way that you deploy cash to get new customers. all of these things are kind of new. And it, you know, a lot of the traditional players actually come from a pretty good spot in terms of their network. So particularly the larger guys have a lot of legacy technology. So just as if you've seen in a, you know, I suppose much bigger, more capitalized space of sort of fintech in general and banking, what is holding some of the traditional guys back is just the legacy technology. And that means it's very hard to change things. It's very hard to retool and change all your processes of how the money flows through. And people, you know, it's a significant amount of money for people to send. So, you know, it's you know, a third to half of your net pay. And people need to know it's going to work, and it needs to work seamlessly, and it needs to work seamlessly first time. So I think it is a hard thing to do. You can't just stick up an app. You have to, you know, we've been iterating on Azimo for years and years and years now, and we still see things that we change that get, you know, double-digit improvements in customer outcomes. So yeah, it's not easy, but then again, you know, I would swap this surge in a heartbeat for a pandemic where, you know, hundreds of thousands of people are dying. But I think you are seeing across all sorts of sectors an acceleration towards digital, be that e-com, be that banking in general, you know, or be that in remittances. And I think that's probably a one-way street.
Yeah, and isn't it more, I mean, there are certain things that are, and I'm going to come to you, Osama, there are certain things that are not in our control, right? When you look at sort of where I think a lot of the regulators, policymakers, I think hopefully on this panel also, and we've had discussions with, also need to help the industry, whether it is in terms of adopting eKYC, the threshold, helping with the preparing the sort of receive side ecosystem, or de-risking, you know, that has been hammering this industry. I mean, just your thoughts on, you know, because Middle East is ripe in some ways for digital, but then there are also some challenges there. And one of the things, if you could touch on is, you know, as an industry, we don't spend any time or money or resources on financial and digital literacy in terms of educating the migrants to really adopt these sort of new methods of sending as well. And maybe a thought on that as well. Oh, sorry, you need to unmute, Osama.
Yeah,
okay.
Thank you. Thank you very much. I believe, I mean, what we've been anticipating industry-wise, that the digital transformation of our offerings to the customer may take kind of 3 to 5 years time. It's been happening today much sooner, and it has become part of the realities, and that the only options available to those customers, even those segments of customer whom we call them the unbanked people, and they've been never very close to the digital side. They've been exploring themselves. Now in UAE alone, the as per Smart Dubai analysis, which is the government digital authority here, the penetration or the number of the smartphones among the people is almost 67%, and the mobiles are available more than 200%. So the infrastructure for engaging customers and getting them on board, whether it is from technology point of view, having applications or apps, or, I mean, it's been available. Now, coming to what you've been touching on is the regulatory part. Now, with such situation, the physical KYC is something not available. The eKYC is something which we've been advocating down here in UAE since the past 2 years. We participated with Abu Dhabi Global Market and the proof of concept about the importance of the eKYC. Like we were anticipating that at one level we would need this one, and there should be kind of clarity about the policies governing the eKYC. Especially, for example, you have here the Emirates Authority ID, which has everybody has his own personalized card. Now getting this one, and we've been in one of the fintech companies, we presented even almost 2 years ago to the central bank, the solution. Now we were pushing for the solution for the eKYC. There is gaps, I believe, now when it comes from regulatory point of view. Each segment or each authority has to play a more a practical rule down here to ease the things. Along with it is the banking sector. Banking sector with the phenomena of de-risking, we've been, not being able to access, certain banks. It is time also to reconsider those issues in order to facilitate. Because I mean, if we don't start collaborating in order to get out of such a situation and makes it more easy to the accessibility of people to get to the financial services, then the alternatives will be going back to the old style, the hawala things, the unofficial channels, and that won't help. I believe it is an opportunity these days when everybody is seeing such situation, and we are able to do it because the infrastructure is there. We are able to work remotely. We are able to facilitate all the operational side remotely today. We are able to provide, even here in central bank at one level, they ask the WPS, which is the wage protection system companies, to send along with the SIF file, the salaries file, their anticipated remittance amount. They facilitated even up to this level. So because it's difficult to mobilize the workers out of their camps or their rural areas camps. And the digital, I believe, is the real solution. Technology is available. It's been practiced in many parts of the world. The only thing is that those gaps are not filled due to certain, restrictions in the past need to be addressed now. And I believe, yes, kind of easing the KYC when it comes to eKYC, even if we link it to certain amounts, and raising at the same time the level of scrutiny and the level of the review we do at the compliance side, that would help as well. So you don't also compromise on the level of control which you are having. You don't want also, because we see the surge of the fraudsters and the fraud is taking place when you introduce more digital. Then it might be also an opportunity for those who might want to capture, the illicit organization or terrorists. They want to capture such situation in order to penetrate the financial system. It should not be the case when we introduce the digital. This is something we need to keep in mind. But I believe looking to the segments we are always serving and getting them on board, this is a good opportunity if everybody collaborates.
Right. No, thank you, Osama. And I think, Davar, if I can, just a quick comment from you. I mean, whenever we talk digital, we always seem to focus on the send side, but clearly to achieve true digital, the receive side is equally important. And I mean, just sort of, increasing the limits on mobile money saw a surge on a lot of the transactions, right? So just your thoughts from a receive perspective, what are some of the things that could be done to enhance the rails that exist there?
What I understand from receive, certain countries like Philippines, even Pakistan, for example, they've been advanced when it comes to the wallets, the available e-wallets, or Bcash has been there since long. And in Pakistan, they have introduced the wallets and the e-wallets since long. And most of the Pakistani banks, and India has been there also since long. You can send directly to the bank account. I believe if from the receiving part, most of those countries, I have seen them more advanced when it comes to, especially down here within the Middle East, to the sending part. The receiving part is available from when it comes to the digital side. Now, yes, we need also to cater to the different, rural areas where there is no means or sometimes to accept the values on the stored wallet or other stuff. But in general, I believe they've been more advanced and they've been more into financial inclusion, based even on a huge community to get them on board, rather than here we are able to now. Technically, we are able to do it, but it is also important that we have such access from our authorities.
So Davar, I want to bring you in from a receive perspective, as you're sitting in one of the largest receive continents.
Yeah, absolutely. And I think, in January, the you asked earlier today if digital was the answer, and I would have said yes if we had this conversation in January. Over the medium term, I think now it will be yes in the short term, and that's a lot what we're seeing. Because even if, and the thing, at least, and this is not specific to Africa, it's probably specific to mobile money. The focus sometimes is on the mobile, but the true magic is in the agent network. That you have now, at least under our own coverage, we have over 2 million of those agents that we cover. I would say up to March again, bank account was a good contender to digital in that sense. But if you just see what's going on with bank branches in Nigeria, and that is just a more dramatic version of what's happening across Africa, where there is just no social distancing possible. Like, it just packed. People are worried about a lot of things, and they're worrying about taking their money. And ATMs are not helping either, because a lot of ATM, and this is not just in Africa, it becomes also difficult for the bank to service them. So from that perspective, the answer, the mobile money as an answer, has definitely been a clear one in Africa. And as I mentioned earlier, a lot of the regulators have recognized this early and are taking the right steps. Having said that, I think there are still some areas where we can do much better. Because what we are hearing from the market, what we are hearing from our partners at the moment, it's a lot of them wants to accelerate the move to digital. You know, we have partners who've been sending to the same markets, but the focus being on cash, for instance, want to rapidly switch, or being able to add mobile money destination. But in some markets like Kenya, not to name names, like Ghana, this is also true. You know, the regulator still insisting on onboarding those MTOs one by one. Even if the MTO is already operating in the market, for them to be able to come through MFS Africa to do disbursement in M-Pesa or Airtel Kenya, Airtel Money, for instance, will still require an approval from the regulator. We think in time of this, we should get a little bit more agile and clever way. At the very least, that onboarding can start instead of waiting for approval from the regulator. Because the reality is, a lot of these regulators are also working in lockdown and are not able to follow the speed that is required in the response in many markets. So I think that is definitely helping. That mobile money is a widely used service across Africa, is definitely helping on the flow and the resistance we're seeing. But what Dilip said earlier is definitely still in the play, which is that we are still in the very early stages. What we cannot help with is if people lose their income, like, you know, there's no money to send, there's no money to send. But the money that needs to be sent, we can get so much better at it by pushing and making the digital so much more pervasive and to become exactly the norm.
Right. No, thank you, Dari. I know we're at 2 o'clock, but I would like, and some people have to go, particularly I think Nick and Mike. So I'm going to cut this question short and do a quick poll on digital. So bear with me for 1 minute. I know Michael would want to see this before he goes. So what percentage of your transactions, hopefully you can see the screen, do you expect to be digital in the next 3 to 6 months? If you guys could. Oh, excellent. Just gonna wait till we get 50% response. We still have over 150 people dialed in, which is fantastic. So, okay, great. I'm gonna end it and share results. So there you can see 37% equally for 20 to 40 and more than 60%. So quite a move towards digital. Look, I think Mike and Nick and, you know, please stay till, I'm going to carry on for a bit because I want to have one more topic, particularly with Dilip. But if you need to go, thank you very much. And we'll catch up soon. Really, really appreciate your time. But whoever can stay, please do stay because we have a lot of participants with us, particularly Dilip and Osama. I don't want to lose you. And Dara, if you can carry on, please do. And if you have to go, I understand. I want to move on to the next topic in terms of I don't know whether you guys would have sort of read or seen in press when MoneyGram declared its results. Alex, CEO of MoneyGram, said 40% of agent locations for MoneyGram were closed. I mean, that's like 140,000 to 150,000 locations. You know, Western Union probably has a similar issue, as we just talked about. Malaysia was closed because it was an essential service. Oman, Kuwait is going to go into lockdown. I mean, that's a real issue. You know, those that have access to some form of banking can move to digital, or they're digital savvy. The rest of them may or may not move to informal or are just stuck. I guess what I would like to explore is, you know, and Dilip touched on it, I mean, making remittance locations as an essential service. But what other things does the panel think, you know, we can really work with the policymakers that could benefit this industry and the migrants now? And I'm going to start with you, Davar, because I think you and I have had some interesting conversations on this from an Africa perspective.
Hello, you broke out toward the end. If you could just repeat for me.
I was just saying that, you know, what are the things as an industry we can ask the policy makers that they could help us in this time to help not just us, but through us, the migrants? Because, you know, keeping locations open, taking time to approve the agents, as you said, you know, EKYC, all of, I mean, they're bigger issues than what can they do to help us help the migrants remit money more efficiently?
Yeah, well, I think the top level and low level things, I would say. If I was to start with the top level, is that we make sure we avoid to fall back in the same trap we fell in every time there was a financial crisis. We're talking about de-risking today. It was as a result of the response of the global north, as Dilip put it, to 9/11, right? So, and after the financial crisis, if you look at the past 10, 20 years, the response to crisis has been dominated by the short-term agenda of the North. And I think we need to make sure we don't lose the opportunity to put the global South on top of the agenda here. And what I mean by that is that the financial inclusion, the facility, the easiness of the remittance has to be centered. And we mustn't lose that opportunity to get this voice across. That is, whatever global policy will come out of this crisis, any changes that the financial industry will do, let's make sure that it's not dominated by the imperative of the global north. So that's the top level. Now, if you come to low level, I think this is the time, just like every company is realizing the inefficiency in their processes and looking at digital ways to address them. I think regulators and policymakers needs to look inward as well and look at what are the inefficiencies in their processes that can be cut out in the time like this and can probably become a permanent solution. You mentioned the EKYC, but in general, I think there is still this question about proportional regulation, which has actually been the reason why mobile money and financial inclusion eventually took off, is because we have recognized globally that you cannot apply the same rules to a $20 account to a $2 million account. But yet, when it comes to cross-border payment, we are still applying the same rules when it's $2 or $2 million. And I think this is a time to recognize and relook at some of these things where can we really, in a globalized world where when you pick up your phone now, you can probably call my mom in Benin and you take it for granted that you can do that and nothing stops you from doing that. Can we worry about you sending $20 to her and expect that that will follow exactly the same rules? Knowing that you can probably record this and send to you, you can share emotion, you can share so much freely. When it comes to money, do we have to bring the full force of cross-border transaction to those things? So I think there needs to be a recognition, and this again does not have to start with the global north. I think even intra-Africa or in the South, we can get cleverer and recognize that the reality of the digital is very different. $20 cross-border remittances was not something people would think about in a cash-to-cash world. It just costs you too much to just walk there to send $20. But we see a lot of $20 transaction between Kenya and Uganda, between Benin and Cote d'Ivoire, between Zambia and Zimbabwe. And I think this is the time to recognize we don't have to apply the same rules. And the second one I would say is very practical, and again, it's just the amount of bureaucracy and the paper that is required in these approvals that we see. And this is a perfect time for some regulators to really look inward to say, do you actually need all this pile of documentation? Because a money transfer business that is already operating a cash business wish to just add a digital one. Do you really, what has fundamentally changed about the risk of the business that requires this lengthy, convoluted approval process? I think it will help the industry if regulators ask themselves that question.
Yeah, great. Thank you, Davar. Osama, a quick thought on, and I'm going to come to Dilip to close, but the issue of taxing remittances, always sort of rears its ugly head when there's an economic crisis. And luckily, I've not seen any of those headlines yet, but it wouldn't surprise me if it does happen. And recently, I also read that Saudi, and there's a question on that too, that Saudi Arabia is putting its VAT up to 15% from 5%. I mean, those kinds of things are just not going to help in the current climate, I would think.
Well, I mean, looking to the impact on the economies of the COVID-19, and it is, I believe, a global matter with all the countries, and the level of the production and different segments being directly impacted: logistics, aviation, the total ban and the travel, the hospitality, the tourism, the chain of supplies. I mean, the supply chain, those things, I mean, definitely is having an impact on most of the economies. Now, I believe within the Gulf, we got a double hit, is the COVID-19, which is something became common with all other countries in the world, including United States and Europe and other parts, and Asia and China. But when it comes for us, the oil price, decline was really very severe. So it is something which is also unexpected. It's not been budgeted for, assuming that the budget was on the average price of $50 per barrel. Now it went below, as we all know, below the 20. That would have kind of an impact on direct impact on the budgets of and income of those economies. When it comes to the tax, there's not, as we all know, the tax is being implemented here, the VAT. Today, the Undersecretary of Minister of Finance, he reconfirmed that there is no increase in the tax in UAE, as that there is an official declaration from the UAE government that the 5% won't increase, and that we know that our charges only are subject. It's not on the total remit, and the charges in the United Arab Emirates is one of the lowest worldwide, as per the World Bank, price list, which they always declare it. So the 5% on what we apply has been something acceptable by the consumers down here. It is very nominal. It does not affect the level of the budget of such remitters. Yes, I mean, ability that this 5% might increase, there is chances in the future, but as of today, there was a clarity. Matter of fact, the Chamber of Commerce of Dubai also made a statement requesting to either to freeze or to bring it down to 2%. So the government had a lot of upfront stimulus, initiatives toward the banking sector and toward different sectors, and they injected more than 260 billion dirhams, around $70 billion directly in the banking sector, and to make it more easy, especially for the SMEs, and the many initiatives towards cutting the, and waiving out the, penalties and fines and delay in renewal of licenses, and even within the licenses of the government, different sectors, they have waived many of those charges also to make it more easy. So I believe there was a lot of contribution from the government toward the businesses down here in order to make it more easy. Now, other countries in the Gulf, even they have subsidized the salaries for a few months, like in Bahrain or Saudi Arabia for the local people. So the government is taking a lot of, I believe, proactive initiatives in order to care and absorb the impact of the COVID-19 on the economies. Yet, I don't think they would touch on this one when it comes to the VAT. We call it on the exchange gain, it's been announced as zero tax, if we want to be more specific. So there's zero tax on the margins of the exchange gain, and it is 5% only on the charges, not on the total amount. And I believe that is something because the government also aware of the necessity of having people sending money through official channels and not to put the people on the other side,
Right.
So overall, yet I believe in my views, we are not seeing the real impact on the economies and on the businesses. We are getting the shock from the health point of view and the pandemic and how we can protect ourselves and others, and we are all restricted to the social distancing and staying at home and working remotely. But I believe once the things we get out of this stage, then we will start calculating the impact on the economies, which I believe worldwide it might not be easy for them.
Yeah, no, thank you, Osama. I'm going to do a quick last poll and then come to Dilip for his comments on this topic. So this poll, I'm just going to launch it now. Should be on your screens. Which area do you consider requires immediate attention by the policymakers? So we've touched on pretty much all of these. If you guys would be kind enough, I think this one you can choose more than one by the looks of it. EKYC seems to be in the lead. We still have 132 people with us, which is fantastic. Thank you for staying even though we're overrunning. I promise to bring it to a close after this, well, after Dilip's comments. Okay, I'm going to end the poll and show you the results. So 71% seems to be about acceptance and implementation of EKYC and to consider remittance services as essential and keep those locations open, which sort of makes sense. And I think, fiscal incentive and financial digital literacy. So that's very interesting. I know there are lots of public sector bodies, policymakers on the call who can hopefully take note of this. And with that, Dilip, as somebody who is continuously talking to these people in government and advising them, maybe give us a sense of where is their mindset? How can we work together with them as an industry and somehow, put some of these things into practice?
Thank you, Mohit. A couple of points here. We cannot separate remittances from migrants. And the view of host communities for migrants, which is also the source country for remittances, the views are very different with respect to these two. So that is where the problem is. And there are countries and regions where there is a bit of a convergence in treating these two in a similar way. But you can see in Europe and let's say North America, migration is not particularly a very, what is the word, favorable topic. Public perceptions are very anti-migration overall, not completely, but overall. Then there are areas like perhaps the Gulf countries where the public perception towards migration is quite favorable. They know that it is an integral part of the economy. But then views towards remittances is different. So there is a dichotomy in the North, so global North. Remittances, actually, there is a much more favorable view of remittances. And in the countries, regions like even Russia and Gulf countries, maybe there is a more favorable view, particularly Gulf countries, more favorable view of migration, but not of remittances. That's why they talk about taxing, why the money is leaving, that is going on. So with that, the current situation, the dominant view seems to be unusually favorable towards supporting remittances. It was just the simple fact that the overwhelming shock of the crisis, the virus, and the speed with which it expanded, and it basically focused attention on save your life first, and then you can save others. And in that others category, migrants fell in. So migrants have been stranded. They're not getting the cash transfer, they're not getting the health care. But by now there is a realization that if you don't help the migrants in London or in New York or in Johannesburg or in Mumbai, then you are in trouble because you might get the virus yourself. So increasingly that awareness is coming, but there are still major issues with cash transfer programs, whether they would actually be inclusive of migrants. Message is going across that migrants are in large numbers there, they need to be helped. If migrants are helped, that translates into remittances. If migrants are not helped, remittances will not be flowing. So that's another angle through which, from a macroeconomic viewpoint and from the global development viewpoint, there is an awareness that if $1 is transferred to a migrant as cash transfer, quite likely 70 cents, 80 cents might end up actually in Mali or in Honduras. So that would complement official aid, which cannot be increased under the current circumstances because of the fiscal crisis. So this is actually a great opportunity to give some ideas to governments, particularly the G7 and perhaps G20 overall, to give them ideas on what can be done to facilitate remittances. So recognizing remittances as essential service is a no-brainer. I think that was going to happen increasingly. Simplifying AML-CFT is a tougher call because when we think about government, it is not one entity. There are many entities and there are fractions. And the homeland security types of pressures are not necessarily supportive of relaxing AML-CFT. So that a case perhaps could be made for small remittances that can be monitored, maybe let it go a little bit temporarily at least. That would be good. Another thing that we have not talked about is the exclusive partnership between post offices and specific money transfer companies, that and specific banks, which are state banks, meaning national banks, and exclusive partnership between them and money transfer companies. So that is not going to happen anytime soon either, because I think, but it should happen. It's a low-hanging fruit. And then the larger question, the medium-term question of facilitating digital remittances and eKYC and improving financial access for migrants, which would facilitate online transactions. Overall, this is a great time to make a push for that, and a lot of good things will happen on remittances because some of the strongest powers in the world and largest sources of remittances, in particular US and other European countries and Canada, and particularly Canada, they are very, very interested in doing something about remittances at the highest level of the government. So we need to give them ideas. But there is the big risk still for all of us about whether this crisis is going to last for 1 quarter, 2 quarters, 10 quarters. And as progressively the crisis stays, migrants' ability to send money will be impacted, and it would translate into lots of hardships for poor families who might fall back into poverty. Children would probably drop out of schools. They might have to go to work again, except that they may not be work. And on top of that is the issue of locust problem and food security that is coming up because of locust problem in Africa, because of disruption to the harvest season in many, like US, Europe, where farm workers are critical during this farming season. So it's not looking very good overall. So we have to do the best we can. and to recognize that viruses don't stop at national borders. They don't look at visa papers or something to see if you have a visa stamp on your passport. So the global connectedness has become very, very apparent to everyone, and hope that translates into global actions to support migrants and remittances.
Thank you, Dilip. No, I think that, one of the sort of bad impact, I mean, there's nothing good about a recession, but one thing that is really bad is that the anti-migrant sentiment seems to increase in times of economic hardships. And I think you make a great point about how you cannot de-link migrants and remittances. So, let's all hope for the best. Look, we could carry on for hours, I'm sure, but we will bring this to an end. And first of all, thank you so much. It's been very insightful. Apologies, not all the questions were answered. We'll do our best to get answers for you. This recording will be on the website at some point, and we will notify you. This is one of many that we, expect to host. So your comments and suggestions would be very welcome. And with that, I'd like to thank our panelists, Dilip, Osama, Dare, and also Nick and Mike, who had to leave. Thank you so much for your time. And everybody, please stay safe. So thank you.
Thank you.
Bye-bye.
Bye.
Bye.